Have you started or is still loading?
Yes, sir, it's recording. Yes, sir.
All right, all right. So, guys, good morning once again. Welcome to this morning session. So today we'll be basically talking about currencies. Okay. So, and we'll be looking at some pairs. And like last week, I gave out a trade idea on GU and GJ. Okay, and we were anticipating a distribution at our POIs. Currently, GJ is currently at our POI, but GU didn't give us that distribution at our POI, so we actually left the trade. So looking at GJ currently, has given us that nice break of structure to the downside and is currently at our POI. So looking at this H4 structural pattern, we saw market giving us that bullish trend, higher highs, higher lows, higher highs, and higher lows to the upside. And here we saw that break of structure to the downside. Okay, here our higher high, higher low, higher high, then break of structure at this region. Break of structure at this region. Sorry, I'm not with my mouse, so to be a little bit of. So we saw that BOS here, right farms. So that BOS, and we are anticipating that price should rally back up to this region to give us that nice redistribution before that sell off, right? But remember, this H4 is still in a bullish trend. So we're actually looking at a bullish counter trend, right? So looking at this from what we know, we're going to measure that move up. That is the move from this guy here to this region, right? So we should expect a distribution at anywhere above the 50% of the move up, right? So we've seen market giving us that move to that. We can see that redistribution at this zone. So what we can do at this stage is go to a lower time frame, look out for that nice distribution at this zone, and take that clean trade. Okay, so let's navigate down to a lower time frame to see if we can actually see that distribution. Okay, so I prefer 15 minutes, right? So let's see if we can actually get that. If we can actually get that move. If that move is currently on 15 minutes, okay. Okay, looking at 15 minutes, we can see that move, higher high, higher low, higher here, higher high, higher low, higher high, higher low, higher high. And here we can see that nice break of structure, right? Consider nice BOS at this region. Okay. Now using our line chart, we can see that clearly. When you go back to your line chart, you can see that clearly. See that higher high, higher low, higher high, higher low, higher high. Then that break of structure. All right. So let's go back to our candle. So we can decide to play. Please mute yourself, please, so that others can actually hear. Okay. So looking at this from here, you can see price actually feel this imbalance at this region. So price action from this zone to this zone is very is completed. There are no imbalances, nothing at all. So we're actually looking to play this region, which is this imbalance, right? Can actually play this imbalance. Let me zoom out a bit so that we can see that. Okay. So looking at this, you can actually measure this move here. Here, the possibilities 1, Actually measure this move here and play the 50%. Now the 50% of this move is actually like the feel of the imbalance here, right? That's cool, right? And also what you can also do is measure the imbalance here. That's the improper price action here, from here to here. Okay, sorry, I haven't picked it. No, with my mouse. So okay, so looking at this guy here, we can actually play the 50%, right? And play this nice move from here, and our stop loss above this high. So basically we can just have this, right? Can just have this, play the 50% of the imbalance, have our nice entry here, our stop loss here, and first of all, as a smart trader, have the mindset of an investor. We are looking at 1 to 3, right? 1 to 3, which actually aligns nicely with the bullish range here. So having 1 to 3, looking at 1 to 3, okay. You're risking 1% and looking to gain 3%. All right. So that's like the mindset of an investor. So that's that for GJ. That's that for GJ. This trader there was sent out last week, and we can see price of POI now, and it's giving us that move. All right. So that's that for GJ. So let's go to Euro USD now. Euro USD. All right. So looking at Euro, let's go to a high time frame and see what price action is presenting to us. All right. Okay. So looking at this guy is pretty bullish here. All right. So, but you see, when trading the smart money concept, you want to look out for those areas of liquidity where price will likely be attracted to. So you would want to look out for those areas of liquidity, right, farms? And also, before we go for the USD pairs, we want to look at our DXY. That's the US dollar index, to see what price action is presented to us. Talking about correlations now, we want to know what the dollar index is currently doing at the time. So we can actually use that to predict other USD pairs like Euro USD, GU, USD CHF, and the rest. That's this other USD pairs having other pairs having USD as their base or the quotes. All right. So moving to the DXY now, that's the dollar index. All right. Let's go to the daily. To be clear on daily, let's go to the higher time frame. Let's see the general sentiment, the general bias of. Okay. So looking at the dollar index is pretty bullish on the daily time frame, like pretty bullish, right, farms? Now looking at this, we can see like relatively equal lows here, right? And that's like an area of liquidity, right? So looking at this guy here, we can see that here overall we can see our higher low here, right? Here, higher high. So we should anticipate that market will definitely clear this equal lows here, right? Coming to this last structural point here at this region, right? To give us that move to the upside. Okay. So in doing that now, what do? We simply take out. Okay, I'm anticipating that the dollar index should give us that move to the downside, right? To actually mitigate out of this region here. That's a possibility, right? That's a possibility, farms. And another possibility is, look at this move here. Looking at this move here, we saw this move here can also be identified as our higher high and higher low, because looking at this move, price did give us that move, came down to this region, right? Right all the way up, but it didn't give us that high. It didn't create a new high here. So that's why we are skeptical about this structural point, because when this guy came here, it mitigated out of this guy. I think it gave us like 100% retracement, right? But it didn't give us that new high here. Can't see that new high. So although we can see relatively equal highs here, but I'm still not convinced with that, right? because market didn't give us that nice higher high there. So pretty much I'm looking at this region here for a reaccumulation to the upside. So measuring this region here, it's this region here is an area which I'll be very much interested in for a nice reaccumulation. All right. So I expect price to come to this region, feel all this imbalance here, and what give us that nice move to the upside. Okay, so that's a possibility. That's talking about the dollar index now. All right. So now let's go. This is our daily range. You see, this is our daily range. Like I said, we can actually, if you attended the bootcamp we held the other time, talking about structural points now. See, we have when we're talking about the smart money checklist now, we talked about range, right? We specified more on range because range differs from time frame to time frame. Now this is our daily range, right? This is a daily range. So going to the H4 now, we can see a different range on H4, which might be an internal liquidity on the daily time frame, but it's a valid range on H4, which you can actually trade between those ranges on any time frame you are. All right. So this is our daily range. We just want to know the trend of the dollar index, right? So we're now navigating to the H4 time frame to actually get our range on H4. So let's go to H4 now. All right. So when you go to H4, you see everything now makes sense, right? Now makes sense. So farms, looking at this, you see, this is our daily range from here to this point here. This is our daily range. But looking at this, closely looking at this, right, farms, you can see that we have from here, let's take from here from our daily range. On H4 now, we can see we have higher high here, we have higher low, higher high, higher low, higher high, right? Higher low, higher high here, higher low, higher high, higher low. You know, here it didn't give us that a new high. So we can actually this is just like a low, right? And here we can see that price actually mitigated out of this guy. So if you were taking this trade maybe last week, your TP might have been hit because you saw that move, so that higher high, higher low, higher high. So you should anticipate that price will come back to the next structural point here, which is this region here, and it did give us that move, right? It did give us that move from here to the upside. Okay, so if you were in here last week, that means you'd have made profit from this move, from this H4 range alone, right? But this guy didn't give us that new high. This guy didn't give us that new high, right? So now the next value structural point that we'll be looking at, that we'll be very much interested in, is this structural point, this one here. So we should be more interested in this guy there. But mind you, this is still our H4 range. From here, we are still in the trading range for H4 here. This guy not. Sorry, let me come. Like I said, I'm not with my mouse. It should be a little bit. Okay. So this is the current H4 range, farms. This is the current H4 range from here, right, to here. So we are still very much in the trading range for H4, right? And looking at this is just the H4 range. This is how you can actually minimize your entries from the higher time frames to a lower time frames. And you can trade in the true range, the true or valid range of that time frame you are. So looking at this H4, you can see this, we are still very much in the trading range for H4. We are getting that that accumulations at this range here. So now looking at this H4, now there's one valid point I want you guys to know. Take note of this now. Above every highs, right? Remember, let's assume market is doing this. Let me make this so that everybody will understand what I'm trying to say. Market is giving us series of higher highs, higher lows, higher highs, higher lows, right? Now let me do this. Okay. Now, remember, before market comes back from this region, before price comes back from this region down to this region, you might have got you will get a redistribution at this region before market will give you a new what? A new structural point. You must get what? A redistribution or reaccumulation. Now at this point, above, that means, let me now simplify this. Above every highs, you will get that nice redistribution to what? To a new low. And above every low, you will get what? A clean reaccumulation to form what? A new high. So take note of that, farms. Take note of that. Okay. Also, we'll be seeing it now on this chart. So now remember, our trading rate for H4 is what? Here and what? Here. And we are still very much in the range. Even though
I can't hear anything.
Not the year again, oh.
Coach, I think you mute yourself.
Please, am I the one not hearing anything?
I think he's having network issues. Let's give him just a few seconds. He will be back.
Thank you, sir.
please, can you guys still hear me?
Now we can
Yes.
hear you, sir.
Where
We
do
can
you
hear you
see
now, sir.
that? Okay, where did you lost? Where did you lost me, guys? Where did
You
I?
were explaining that above every high, there's you find a redistribution, and below every low, you find a reaccumulation to
Wow,
create a new high.
wow, that's like okay, no problem. Let me go back. Hi, okay, so let me go back. Network here is just I don't know, it's just not encouraging. Okay, so right, guys, looking at these guys, you see, like I said, above every highs, you always get you always get that distribution, and below every lows, you always get that reaccumulation, right? As simple as that. That's just the simplicity about that. So now this is our H4 range, right? From here to here is our H4 range, and we are currently still trading inside the H4 range. Once you master your structure, then trading becomes very, very easy. Okay, fam. So looking at these guys, we are still very much in the H4 trading range. And here you can see market give us that lower high, lower low, lower high, lower low, lower high, lower low, and a break of
Zimi, I can't hear anything again. Please, see my network. I can't hear coach or anybody.
It's not your network. It's not your network. I think it's from his hand. It's from his
It's
hands that
not your
interrupt the
network. I
meeting.
think something has been
Thank you, thank you.
disconnected. The person hosting the meeting.
Okay, thank you. Please.
Sorry, farms, please, can you hear me now? Sorry, the network here is just terrible. I don't know.
Yes, we
I
can now.
My spectrum,
I can hear you. I can hear
all
you,
right.
sir.
My spectrum net is misbehaving. All right. So farms, like I was saying, we are still very much in the trading range for H4. So now going down to H1, we are seeing market giving us that lower high, lower low, lower high, lower low, lower high, lower low, and what break of structure here, right? So market is giving us that nice move down to this region to give us that redistribution, reaccumulation. Give us what that reaccumulation. All right. So now, what do we do here? You can actually, our trading range for H1 is now from here to here, farms. Sorry, can you guys hear me?
Yes,
Yes,
we
we
can
can.
see
Yes,
that.
sir.
All right, all right. So we are still very much in the trading range for the range for H1 now is now from here, farms, from what here to what here. This is the trading range for what for H1 farms. So this is how you can just scale down from daily trading range, H4 trading range, H1 trading range.
We can't hear you again, coach.
All the way down to seconds. I mean seconds, and take a very
It is
clean trade.
network.
So guys, looking at this is like our trading range now for what? For let me take out all this. I'm coming. Don't know why all this. Okay. Okay, I think. So this is trading range from our H1 now. So now that we've gotten our H1 trading range, we can also scale down to a lower time frame, let's say 15 minutes, to get a very clear range. And at least from there, you see our stop loss would be very, very okay for us. Instead of taking trades from the daily or H4, can actually navigate down to lower time frames, like 15 minutes, 5 minutes, and get what? A very nice risk to reward ratios, farms. So now gotten our H1 trading range. So let's scale down a bit to a lower time frame again, which is 15 minutes. All right. So to 15 minutes. Now, if we get that nice break of structure on our trading range on 15 minutes, right, then we can actually take our trade. Okay. All right. So let me show us before we come down to 15 minutes. Let's go to our 1 hour so that I want to show you something, farms. All right. So there are certain things that you want to be very careful of. Areas of liquidity, imbalances below your POIs. Okay. So looking at this, guys, we know that market has already given us that BOS on H1, and we are expecting that price should actually come down to this region to mitigate out of this area. All right. But mind you, look at this, because you have to open your eyes, right? You have to open your eyes, farms. This is your H1 trading range. This from here to here. So whatever you are doing, your stop loss should be what? Your stop loss must be at this region. Okay. So if this is your trading range, make sure that above your entries, above those regions which you will be looking to take your entries, make sure that there are no liquidity areas or imbalances below what? Your entries. Because market might give you that inducement. Market might try to what? Induce that buyers, those early buyers, those FOMOs, those guys that are afraid of missing out. Market will give them that inducement, induce them into the market, clear them out again before they come for that proper entry. Like I said, market does not live without us, farms. So if I'm to take this H1 trading range, remember, like we taught you guys on the boot camp, the last bearish move, right, that swept liquidity, you want to what? Measure the 50% of that bearish move. And in this case, let me pick out my Fibonacci. This, we want to what? Measure this move here. Although market did play out of the 50%, so if you were in on this trade, if you actually took this trade from your from your 1 hour time frame, having your entry here, right? Having your entry here, your long position here, right? Okay, have your stop loss here, all right, and you're looking to take profit at this H1 range, all right, which is like a nice 1 to almost 1 to 4.5, right? So now you might already have been activated from this region, okay? Yes, you've been activated. That's like a sniper entry, and maybe give you that move to the upside. So now going to 15 minutes. Now remember, I told you guys that above every highs, you always get that nice redistribution, and above every lows, you always get that what? Nice reaccumulation. Remember, market gave us this higher high, higher low, right? Now give us this new high here. Now above this high, we got what? If you go to the lower time frame above this high, you will see that nice distribution. You see above this high here, above this high. You see this was the last higher high here, higher low, higher high. Above this high, we got that nice redistribution. You see, market gave us that higher high here, that higher low here, higher high, right? Broke structure, came back, played out of this move at this last bullish candle, that other block there, sweet move, like very just sweet move here. Give you, in fact, if you entered at this region, now you're looking towards take your stop loss at this, you put stop loss at this region, and you've had that nice at least 1 to 4 or 1 to 5, right? So that's not what we are in for now. We are since our trading range is still pretty much bullish, we are looking for what? For bullish entries, right? So mind you, there's an equal lows here. There's an equal low here on H1 now. On H1, equal lows. So, for example, farms, when market was coming all the way down here, you'd want to what? Take your entries from here. You say, right, let me take my entry from here. Since I can see that, okay, market will feel this imbalance and this guy has actually played out of this move. But no, sir, if you look at this very well, you see that there's an equal lows here. Look at it, farms. As I say, you need to open your eyes. Look at that equal lows here. Look at that liquidity there. Line there, sweet. That sweet liquidity line there. And what did these guys do? They came down and look at that clean sweep there. Look at that sweep there. If you go back to your line chart, it will be very visible there. Look at when you draw this line from here. Let's draw it from here all the way to, sorry, no, you can see, guys, you can see those guys, they came there. Look at that clean sweep there. Look at that clean sweep. You see that that clean sweep, and what happened? They tapped into that imbalance. Look at it. They tapped into that imbalance. They tapped into that imbalance, farms. Look at it. You see, there was an imbalance line below our point of entry. There was an imbalance line below that liquidity. So those are the things you want to be very careful of. Okay, so you see, they tapped into that imbalance nicely after sweeping out that liquidity. Now, some of you might have taken your entry at this region, ignoring that what there was a liquidity, there was that liquidity pool line below the POI. So market swept that liquidity, tapped nicely into that imbalance, and what is giving us what? That nice bullish move to the upside. Now, this is our H1. I want to demystify every time frame for you so that you see how you can actually filter your trades from higher time frames to lower time frames. Now, scaling down to your 15 minutes now, 15 minutes to get that proper entry. Now we've seen that 15 minutes has given us that move, right? We saw 15 minutes giving us lower at our POI, right? So that lower high, lower low, market break of structure at this region, right? You see, and in fact, this is just amazing, right? Because you see how we've scaled all the way from the daily H4, H1 down to what? The 15 minutes. All right. So this is what we are expecting on 15 minutes. 15 minutes has given us that bullish, that move, that lower high, lower low market break of structure. And we should anticipate what the market will come all the way down to what? Give us that nice, but mind you, farms, you see, price action from here, all the way here is just complete. It's like these guys are not giving us that, they didn't want to give us that entry at all. You see, price action here was just complete. Okay, now, and we also said this, that these smart money guys, all they need to do is come and tap out of their candle in drawdown. They don't care if, who's that? Please mute yourself. Who's that? Please mute yourself. Please mute yourself. Head of house, please mute that now. Thank you. All right. So we want to for a very conservative entry. Please, if the guy's omitting himself, you can just kick him out, please. Please. All right. So what we're actually looking for is that 50% of the whole move, right? Of the whole move here. That move. Okay. So, and we saw that this guy, sorry, before it broke structure, this guy already tapped into what? Into that move. And you see, this whole move here is like the move that was short liquidity at this region. So these guys, what they have to do is just come and tap the open. And if you look at this nicely, you see that those guys, they actually came all the way to tap that move. Okay, you see that they actually came down to what? Tap that move here. Look at it. The open. They just tap that open and they can just go all the way. So it's not compulsory they must come to 50% to tap us. But in most cases, like 80% of the times, they always come and close, at least because they are very greedy. They can come and close 50% of their drawdown, like in 50% profits. But they also don't need to come. They can say that we don't want to come. All right, so that's it. You can see how 15 minutes give us that nice move. So if, let's say for example, we're taking this move here, if we're taking the open of that guy here, right, stop loss here, and we are looking at what? We're looking at our what? 15 minutes range here, but we navigated all the way down to this region to actually get a very small stop loss. But our point of interest is the daily high. I mean the daily high. So imagine getting this small stop loss, then you're now targeting your daily high. That's massive, right? That's so massive. That's like massive farms, right? Now, I know another question that some of you might want to ask me is, what if these guys came all the way here? Because in some cases they do that. They come here again, sweep this low. They are still within the trading range, right? They are still within the trading range. They just come, sweep this low again, give you that nice reaccumulation. What do we do at that for that? You see, I know some big traders that trade smart money. When they've identified their trading range and they've gotten that nice accumulation on lower time frame, they still stick with what? With their stop loss for the trading range. If it's not that big or damn, because at this level, you can see that our trading range ends here. So even if you are putting your stop loss here, let's do this, right? Even if you are putting your stop loss here, let me answer that question before somebody asks that question. Let's assume your stop loss is here. Let's just assume. And we are going to the daily time frame, right? Let's go to the daily time frame. The daily time frame, right? Go to the daily time frame. All right. I can't even see my entry. Let me delete this trading range. Okay. Let's as okay. And we are targeting this daily high, right? Targeting this daily high. All right. Okay. We are targeting this daily high. All right. That's like nice 1 to 4.28. All right. But the reason why we are actually sticking with the stop loss for the 15 minutes is for a nice risk to reward. So imagine this is look at this. This is for getting our stop loss for the whole trading range. But what if we can actually get a very tiny stop loss? Let's go to 15 minutes now. Go back to 15 minutes. So we can compare our stop losses, right? So mind you, we want to put our stop loss below this trading range for M15. Let me mark it out so that I can just do that. Yeah. Okay. So let me go back to the daily. I want us to compare the advantages of actually having our trading range. Okay, let's go to 15 minutes again. All right, so why is this guy so far? Yes, okay. Let's take this here. All right, 15 minutes. Okay, all right, so let's have this stop loss adjusted to our 15-minute range. To our 15 minutes range. All right, it's our 15 minutes range, right? Okay. Okay. Still, okay, that's okay. The up one. Let's have this adjusted to our 15 minutes range. All right. So now going back to the daily now. I want you guys to see the beauty. See the beauty of this guy. So go back to the daily time frame. Right. All right. Now you can see your risk to reward ratio has increased to what? 11. 11. All right. So this is the advantage of actually scaling all the way from your daily time frame to what? To your lower time frame for what? A clean entry. Putting in mind what? Your trading range. Okay, fam. So that's that. I just use this DXY to explain things a little bit. So now this is our US dollar currency index. And we know that for our US dollar currency index, it actually shares correlation with assets, with pairs that have USD as their base quote, or what? Or they are what? Or they are what now, farms?
Quote.
Are you with me? If you're with me,
Or their quote.
Quote and what?
Or their
Or their
base.
quote. Their base or what? Or their quote, right? So this is so if you can, that means you can actually use just this your DXY to predict your movement for what? For your Euro USD, GP USD, USD, CHF, USD card. All right, NZD USD, AUD USD, as the case may be. All right. So now, for anything your DXY is doing, your Euro USD will be doing what? Will be doing the direct opposite. So going to Euro USD, we should be seeing something opposite of this on Euro USD. We're seeing something opposite of this on what? On Euro what? USD. Okay, this is our Euro USD farms. So if we are looking to buy Euro USD, so what we should be looking to what? We should be looking to what? Sell. If we need to buy DXY, we need to what? Sell Euro USD, isn't it, farms?
Sell USD.
Now,
Yes.
so farms, you see, this guy actually gave us, looking at D1, let's demystify D1 down to the 15 minutes again on Euro USD. So looking at this guy, you can see this guy gave us higher high, lower high here, lower low, right? No, lower high here, lower low, lower high, lower low. That break of structure, so that BOS here, and above this high again, we actually seen another redistribution. You see here, we see here higher high, higher low, higher high, right? Break of structure here. Market came back here and it's giving us that what? The distribution farms. You see, it's just easy how you can actually do this. So currently, our trading range for daily, we can actually say, okay, from here, because we saw market do this, you see here, higher high, higher low, higher high, break of structure here, and what? Market came back here, giving us that redistribution to what? To the downside. So we can actually navigate down to lower time frames and see if we can actually catch a sell move on Euro USD. Particularly, I think why I believe Euro USD and GBP USD should give us a short is because of this tapering, the issue of tapering. Because we saw the US central banks. See, the central bank, they induced tapering. That was November, and they doubled the tapering by, I think that was December 15. Now, you might ask me what I mean by tapering. You see, it's what you call in the financial markets, it's what we call the tapering. That's the quantitative. We have the quantitative tapering and the quantitative easing. The quantitative tapering and what the quantitative easing. Now, what is quantitative easing and what is quantitative tapering? All right. So I'll quickly explain that a little bit before we continue with our charts. Okay. So just let me explain this in a layman language first before I go deep in the layman's language. Now, quantitative easing, this is why your US dollar index is what? Is selling. That's for quantitative tapering. Quantitative tapering is the reason why your US dollar index is what? Is selling. Why quantitative easing is why what? They are buying. Now, let's go to Google and what? See what tapering means. Then once you see what tapering means, then let's try and analyze it on the charts and see how those things affect what? The financial markets. Because you don't just technicals are very good, they are good, they are great. But when it comes to the fundamentals can rubbish your technical analysis in just seconds. Take note, fundamentals can rubbish your technical analysis. Please mute yourself. Okay, like I was saying, fundamentals can rubbish all your technical analysis in just seconds. Being smart, if you like, use smart money, use week off, use the box strategy, anyone you're using. Fundamentals can just take off all your technical analysis and rubbish it within just seconds. We've seen that so many times during the FOMC, the NFPs, and the rest. Okay, so you need to understand this, how all these fundamentals actually affects the financial markets. Especially most times you hear Fed Chair Powell, you hear him say tapering. What is tapering? What is quantitative easing? What is quantitative tapering? And how does it affect the financial markets? So now let's go to Google and see what tapering means, farms. Let me share the screen. All right, so let me share this tab now. Can you guys see this tab?
Yes.
Now, you see, I think I love two definitions here. So I'll just talk about, I think, this one said tapering refers to the Fed systematically decreasing the amount of assets it is purchasing each month. Okay, I love that. That definition is also good. Okay, and mind you, said this can have a meaningful impact on the economy. So definitely, it will have, if it's affecting the economy, it's also affecting the currency. So definitely, it will affect the financial markets. All right. So looking at this, tapering, see this very first definition here. Say tapering is the theoretical reversal of quantitative easing. Underline that word. theoretical reversal of quantitative easing. We will go to quantitative easing and see what is quantitative easing. Now, which are implemented by a central bank and intended to stimulate economic growth. Wow, I love this. Now, look at this second definition here. He said, tapering is the gradual slowing of the pace of the Federal Reserve's large-scale asset purchases. Now, I will explain these two sentences here. The first one, which says, tapering is the theoretical reversal of quantitative easing. That is, I told you guys that quantitative easing is what is the reason why your dollar index will be buying. Why quantitative tapering is why what your dollar index will be selling. Now, if tapering is the theoretical reversal, that is, now tapering is what? It's like the opposite of what? Quantitative easing. Quantitative tapering is what? The opposite of what? The quantitative easing. Now, the second definition says that now what is this tapering? It's what is the gradual slowing down of the pace of Federal Reserve large-scale asset purchases. Now, the reason why we are seeing BTC, bonds, metals, everything, they are just falling. You see, the reason why they are just falling now is because of what? Tapering. Tapering is the reason why these guys are falling. You can see your indices. You can see how NAS was just falling. In fact, NAS disrespected structural points and it was just selling and selling and selling. NAS was selling. US30 fell. That's indices now. They fell. Bonds fell. Cryptos are falling. Why are they falling? It's because of what? Tapering. And what is tapering? It is the gradual slowing of the pace of the Federal Reserve's large-scale asset purchases. It simply means that what? The US economy, they reduce the rate at which they are purchasing assets. They are what? Reducing the rates at which they are what? Purchasing what? Assets. That is why we are seeing they are no longer buying assets. They are no longer buying cryptos. They are no longer buying all these stocks. That's why you see everything is just falling and falling. This is what? To stabilize their own economic growth. So anytime you are seeing this on your news, because most times some of you just go to, you say I want to go to forest factory and see there's news. You just see news, but you don't know how to analyze it. And most times you see tapering, you see all the rest, all the likes, but you don't know their effect on the financial markets. Now, when the Federal Reserves are inducing tapering into the market, that means that what? They are slowing down what? The rate at which they are purchasing all assets. That is the simple meaning of what's tapering. All right. And when they are buying, it's what? That's what quantitative, they are what? Easing. When they are buying assets, it's what? Quantitative easing. That's why here they said tapering. That's why the first said what the first definition here said trading is what? Tapering is the theoretical reversal. That's the reversal of what? Quantitative easing. Are we clear? Are we clear on these farms? So if the Fed Reserves have induced tapering into the market, so definitely the US dollar index should strengthen, right? Right? We're on the same page, farm. So if these guys have induced tapering into the market, that means the dollar index should rise a bit because they have stimulated their growth. All right, so these guys should actually give us that bullish move. So that's like that's the compliments also to these trade ideas. All right, so that's why you see yesterday I sent a BTC trade idea out. Some persons were like, "Are you sure BTC will get there? BTC will not get there." All those kind of stuffs. But for me, the tapering is the reason why I actually came about that BTC trade idea, because I still see more falls. I still see that BTC every time. I still see stocks, indices falls to the downside. All right. So that's that, farms. Let's go back to the charts, farms. Let's go back to the charts and see. So this is USD going to the daily, and let's go down to the H4 time frame, farms. All right. So looking at this, we saw that move higher high, higher low, higher high, higher.
So we're still on the old screen.
We are not seeing higher low, Kankan.
all right, sir.
Oh, wow.
Come down, sir. All right. So you see, this is how you can actually trade. It's easy, it's very easy to trade all these things. It's easy, farms. It's easy. All right. So looking at this, you see, we saw this market give us higher high, higher low, higher high, higher low. You see here, looking at this guy here, higher high, higher low, higher high. See that clean BOS there? See that BOS, that brick of structure, and we see market. See, first of all, what happened there? It gave us that that induced sellers to the market, and came back down here. Looking at this range here too, it gave us what? Lower high, lower low, break of structure. Came back, mitigated of this guy, went all the way back up, give us that what? Equal highs here. You see, it's very sweet and easy. And you see, when you analyze this, you have to take time to analyze your charts, because this is where you want to make money from. You don't just come, see moves, take moves, and you're out. Later you say, these guys are manipulating. It's not manipulation. It's simply because now let's take for example, we are getting maybe a BOS here, and if these guys decides to just come back, clear these equal highs, and like just play this equal highs, come and fill this tap this imbalance, and before rallying all the way down, I won't be surprised. I won't be surprised, right? So this is like our hit for. We can see that we've seen that BOS to the downside, BOS to the upside. Okay, but mind you, on the daily, this is our daily trading range. Let's mark out the daily trading range. All right, we've seen this guy giving us that BOS here. So this should be our range here, from here, right farms here to what here. For now, this should be our trading range. All right. They are even equal lows here. Look at equal lows here. So I believe this guy should come all the way down to what tap this guy here, as the case may be. And remember, let's look at the daily. Let's look at the general structure with the daily. Let's look at it, guys. So, guys, please, somebody should tell me what is the general structure of this market on daily. What's the general structure, farms?
It's bearish.
It's what? Very, very bearish. All right. So
Bearish, yeah.
very, very bearish. So it won't be. So you shouldn't be surprised if I'm looking for sales on this. Right. Okay. So looking at going back to the H4. Okay. All right. So this guy is just going. All right. So we saw market give us that high, low, high, low, high, low, high, low, and break of structure here. This is break of structure here, and came back, fill this first imbalance, give us that nice break of structure. We tested and what came back. In fact, you can actually trade counter trend, counter trade within a range. All you need to know is just your trading range, your structural points, your trading ranges, guys. So from there, you can just navigate. All right. So that's as easy as it gets. All right. So, but for me, this for Euro USD, let's scale down. We've seen our trading range. Let's scale down to lower time frame and see if we can get a nice move off. All right. Let me kind of shrink this. Take this guy out. All right. All right. Okay. So, this guy has actually given us. You see here, it first of all gave us a break of structure here. They tested, came back again here, higher, lower high, lower low, lower high, lower low, break of structure. We tested here. You see that clean entry here within your range, within that range, lower high, lower low, lower high, lower low, break of structure. And look at that nice mitigation of this candle here, and what give us that nice rally up. Okay, so one would want to actually take your entry here, maybe looking out for that BOS here. But like I told you guys, always go in the direction of the market, flow with the market, go with the flow, whether the bearish order flow or the bullish order flow. Now, looking at this order flow, talking about order flows now, we can see that after this guy gave us this break of structure, we tested, give us a new high, right? Indicator of this guy, it has already indicator of this guy, came all the way up again, give us what? Give us a new high here. Give us what? A new high. Now, remember I told you guys, I said above a new high, above what a high, you always what? Get that reaccumulation to what? Get a new higher low or a new low. Now, this is your high here. Market came back here, right out of this point, and created what? A new high. Now, at this point, let's see if we go to a lower time frame. If you can actually see the accumulation at this point here, this point you are seeing here. If you can actually get that redistribution, I mean, at that region. Let's go to 5 minutes. If we can actually spot a move there, so that you see these things are not just rocket science. It's something that's very visible on charts, right? Okay. So looking at this, you see, if you can actually see a distribution here, I want to drop a 1-1 on the chart. If you can actually see that distribution at this region, you can actually, let me see that 1-1 on the chart. 1-1. If you can see it, farms, let me see 1-1 on the charts. 1-1, please. All right. Let's go, farms. Let's go. Okay. I can see that. I can see if you can see that 1-1. Okay, I can see familiar names dropping 1-1. All right. Oh, Abraham Drutoy. All right. Oh, nice, farms. So you see, you can see that nice distribution at every high. You always at every high, farms. When market creates a new high, before it comes back to create a new higher low, you always what? Get that redistribution to come and create that new higher low. Always, farms, always. Because market never lives without us, right? Market never lives without us at all. It doesn't. It can't. It shouldn't. Okay. So market never actually lives without us. All right. So now remember, we're looking for sales on Euro USD because we are pretty much bearish on the pair. Okay. So let me trim this a bit.
Coach.
So yep.
Sorry, I sent a message on GJ. Maybe we should look at it. I said it has gotten to the retest we're looking for.
Okay, on the chart.
I think yes, I sent it on the chat.
Okay, okay. Since
left, left.
If you actually set your limit, then that means you guys should already be in profit, right?
I did not enter. It was when it was around that area. I sent the message on the chat, but you didn't see it.
Oh, sorry. But I already dropped the markup, so I don't think I should. I think I already dropped the markup, farms. So drop the markup, right? Drop the markup, so it should be in by. It should be in now, farms. Should be in now.
I'm in profit, sir.
All right. All right. Let's go, farms. Actually, I think I didn't get to set my limits, right? But there's no problem. You see, market never market's always here, farms, always here, right? But at least we can now see the beauty of this. Okay. So let's go, guys. Let's go. All right. So that's that for Euro USD. Let's get our entry now on Euro USD. Let's get our entry. So for me, I would still this guy's already giving us that redistribution on the lower time frame, and I would be looking at a reaccumulation at this region. Okay. I'm looking at a reaccumulation at this region, Okay. I'm looking at a reaccumulation at this region. So I want to see market do this for me. I want to see market do this. Right? Market should actually come here, like something like this. It's on my mouse. Let me use my mouse. Let me use the polyline now. So I want to see market do this here. that lower high, lower low, lower high, lower low, lower high, lower low. Then give me that BOS to the upside, come back. Oh, wow. Then comes back here. Mitigate out of this guy, right? And what I'm looking at come this guy here, tap out of this region, and what give me that move to the upside here. So once I get that move to the upside here, remember here will be my take profit first. Here will be my first of all. It's massive, fam. It's massive. Getting my take profit here, right? Getting my take profit here. But for me, I'll still be. You can still hold at that region. I want to hold. Okay, hold. I want to hold at that region because you can see this. Please mute yourself. Mute yourself so others can hear, please. Because I can see that liquidity here to be grabbed. Remember, we're still very much in trading range. Remember, I'm still very much in trading range. So I want to see this guy grab this liquidity, right? When you get that liquidity, and to see them come here, tap into this imbalance here. I want to see them come to this imbalance here, tap into it, right? Tap into that imbalance, and give me that nice move to it. Give me that fall. I want to see that fall on Euro USD and GPUSD. I want to see that fall. Yes, I want to see that fall. Okay, so this is like what we'll be expecting. Please, that GJ I'm coming? Did I even send that out? I didn't send that out. Wow. Well, no problem. If that's for those on the call. So I'm looking at this guy. This guy should actually reaccumulate here, right? Give me that reaccumulation at this region. Then okay, that reaccumulation at this region, and come all the way up here to what? Fill this imbalance, then fall. Give me that fall to the down. I want to see that fall. Let me see. I want to see that tapering walk. I want to see how that guy will fall down to the drain. So let's see. So this is what we are expecting, farms. Markets should actually give us this accumulation. While you are still holding this, you wait for market to get here. Once it gets here, wait for that distribution, and what you can actually hedge, right? It will be nice. You are hedging when you're activated at this region, then break even here, then break even here, and you see it's nice trading. You see trading the range. Trading the range is just cool. You know your structure, trading your range, getting your buys, getting your sales, getting your buys, getting your sales from just one or two assets. Buying, selling from just one or two assets. You'll be cool. So instead of actually moving from one asset to the other. Today you are card CHF, today you are card JPY, tomorrow you are moving to gold, moving here and there. You see, you get confused, right? All right, so that's that for EU farms. That's that for EU. Okay, let's that's that for EU farms. That's that for EU. All right. Okay, so that's that.
So you didn't save the EU chart.
Okay, I'll send it, please. I'll send it. So you can see, look at our GJ. GJ will mark just now. So it activated us just now. Activated and it's already moving, fam. It's already moving. Let me see how much it has given us already. 1 to 2. Right? 1 to 2, right? 1 to 2 already. Isn't that nice, fams? That's nice. So it's cool. That's cool. If you are in, congratulations. You're up 1 to 2. So you see, this is like having the mindset of an investor, right? So now we've gotten a new low here. Looking at 15, we've got a new low. So for those people, for the guys, for those aggressive traders, if this guy actually closed below, okay, if it closed below, you can actually measure this move again, take 50%, your stop loss above this high again, then you hit it again. You just keep stacking all the way down to your range. So within just fewer trades, you've passed your FTMO accounts, you've passed your MFF accounts as easy as it gets. So that's that for GJ. All right. So going to okay, let me send this USD out. I think that was on H1. I did that on H1. Okay. Okay. So this is what we're actually anticipating. Well, another thing I'm seeing here on you see the price action here is balanced. So probably these guys might just feel this imbalance here. Maybe they don't want to just come to this region, just feel this imbalance at this region, and what come all the way, clear this liquidity. But I'm very much interested at this region when EU gets here. I want to see that nice move here, that move, that signature move here. To see that signature move here at this region, to see that market coming all the way up here, giving me that series of higher highs. When it's coming higher highs, higher lows, higher high, then see that BOS comes back here, right? And you see, give me that move to the downside. Okay, let me, oh, interesting. Come on, let me shrink this a bit so that you got, okay. Okay, I'll appreciate EU doing this for me at this region. I'll really above these highs. Remember, above every, like I said, above every highs, you should always get what a redistribution. So above this high, at this POI, I should get what a redistribution. So I'll be hoping to see EU giving me this move, like move here, come here, break the structure, come back here, and give me that nice move to the downside, right? I'll really appreciate that. So that's that for EU. So I'll just quickly send this chart out, copy this chart image, and so it's on the chat box now. So the chat box. It's on the chat box. I won't copy that. Okay, let me just copy the link. So it's an image. Okay. All right, it's there. Okay, so like I was telling you guys, you don't need to trade more. As a prop firm trader, you don't need to trade much assets. Ignore all these things you don't need to trade much assets. Just pick 1, 2. Yeah. Just okay. I'm trading EU GJ or EU GU US30 NASDAQ, and just pick 1, 2, 3, and you'll be okay. You don't need to trade all assets to be profitable. Just trade few, and you'll be okay, right? So let's, for the sake of like I said, I'll be analyzing only the major pairs, only the major pairs. I don't want to go for minor or exotic pairs. No. So let's just keep it simple. So going down to, let's go to GU now. Let's go to GU. You see, we actually had a trade idea out on GU last week. Well, we never got distribution around this region, right? We never got that distribution. Now, you see, I was on call this morning with some farms, and I told them that, look, because this guy created a new high, right? There are things you should look at. You don't just enter your trades blindly. You don't just do that, farms. Look at, when we're talking about internal and what external liquidity. You see, this guy gave us a higher high, came back here. The get of this guy give us what? Give us this higher low and a new higher high. So these guys, see, this morning, before this H4 candle printed, I think I'm just seeing this now. Before this H4 candle finished printing, I told, because we're getting above this high, we're getting what? The distribution on a lower time frame. But I told them, no, we can't take that. Now here's the reason why we can't take that. I saw this liquidity, saw this relatively equal highs here. It's not liquidity. I said these guys will want to what? Weak out people that will be those early sellers. They want to weak it out. I said that this morning. And look at just this H4 candle before this H4 candle, what they do? They actually came up here, because then this H4 candle was actually bearish then. It was actually bearish then. It was bearish then. and guys were already taking the trade because they saw a redistribution on lower time frame above what, above this high. But looking at this, you saw it's pretty easy. Smart money makes things easy for you. We are seeing liquidity here lying sweetly, nicely there. You can't just take that. You have to wait, because I knew for sure that they were going to what, sweep out these guys. I knew for sure. And what happened? But I'm loving this. All these guys did, they just, you see, look at that clean sweep. Look at that sweep there. They just did that clean. They swept everybody that was selling, and they came back again. I love, you see, they came back to what, respect that structure. I so much love this financial markets, you see, because what they actually give you, they actually give you that that clean move to, please excuse me, farms.
Sorry, we cannot hear you.
He said you
He
should
said
get
you should
open.
Okay, sorry guys, sorry. um Let me go back to my 1 hour. I was actually explaining from 1 hour, right? Okay, no, yes, on H4. So like I was saying, I told this guy is going to sweep. Is going to sweep this out. I knew that for sure, and they did that, and they came back to respect structure. That's market for you. You can't hold them for anything, because it's what. This is not. You see, some of you will think this is manipulation, but it's not manipulation. It's never manipulation. You see, this guy's giving BOS, and they still came back to hit my stop loss. Why would they do that? This thing can manipulate. They can, but no. Somewhere you can't just take trades because you see the BOS. Look out for the reasons why your trade ideas might fail. So when I told them that, guys, take profit or break even, because this guy will actually come back to sweep this. Some actually followed me, but some thought I was just joking. And look at what happened, guys. You see, look at that clean sweep. Look at that clean sweep. It just came out, came back, sweep everybody that was buying, even though you've seen a break of structure, but no problem. Now, go to the 1 hour, you see it clearly on 1 hour. Look at it. Look at that BOS farms. Look at it. Higher high. Can you see that? Higher high, higher low, higher high, right? And you see that BOS. So you expect market to what, come here, and what they will do is when they comes, look at that candle, that bearish candle. When they came there, you see, there was a guy who just took that. He was shouting, sheesh, all those kind of stuff. Just I said, young man, break even, because this guy will finish you. And look at what happened, farms. It actually they swept that. As easy, they swept that, right? They swept it. So it's simple, right? That one is, it makes it easier for you. But somebody somewhere, like a retail trader who is seeing a double top, right? Oh, double top, and market comes back and hits the stop loss, you'll be like, these guys are manipulating. But it's not manipulation. It's not. It's not manipulation. This is where I'll just do this. This is where I see. I'll just simply take my beer here. You just, guys, sit down there. Sit down there, because they'll come. They will come for you. Sit down there. They'll come and slaughter you. So they just come there, slaughter everybody. So it's not new, fam. So what we will do now on GU is looking out for what? Because we are now actually above the highs. We are above the high. All right. On the HO, we are above the high. So we are looking out for what? That with distribution above the highs to what, give us that nice sell. It will sell. It must sell. All right. So let's look out for that. So when I spot that, or maybe whenever anybody spots that, we can drop that, and so everybody will benefit from that. So now, like I said, I will not be going through all assets, just few assets. We are okay, guys. We've gone DJ, EU, GU now. So and I'll take just one indices or two indices. Then let me go for so USDJPY, right? USDJPY, USDJPY, USDJPY. I think if DJ is selling this guy, because why is this guy actually? Okay,
Yes, sir.
Yes, sir.
All right.
Yes, we can.
All right.
Yes, we can hear you.
All right. So you see, somewhere, somebody might have been seeing a bullish flag when this guy formed from here to here. A bullish flag. Those retailers, and like we all know, for smart traders, bullish flag is actually dynamic liquidities, and definitely these guys will actually come for all those rubbish, right? So that's it. So, but a smart money trader would have gotten into this trade. Here we saw market came here, give us this low, came here again, did this, give us this low, from here again, tapped here, give us low. So what do you expect? When it's coming back, it will what, tap this guy and give us a new low also. So going to like 15 minutes, you see that move. You see that nice move, guys. You see that nice move that actually gave birth to this move that's happening now. Let me shrink this a bit. And these guys should actually go down. Okay, so you can actually see what this guy was doing. See, lower high, lower low, lower high, lower low, lower high, lower low. So if you expect market to what? Market to reverse from the 50% of this move here. This move here, right? Like these are signature moves, right? These are signature moves, farms. Okay. So how would they have gotten into this trade when market was coming to activate this low? You go to a lower time frame, right? Go to a lower time frame. Go to a lower time frame. You will see that BOS. That BOS will be there. It will always be there, farms. Always. So guys, can you see that BOS, guys? Can you see it, guys? You see, market give us that higher high, higher low, higher high, higher low. Came back here. You see, these guys already tapped this other block here. Give us that nice BOS. So when this guy came back, what happened? He tapped what? This move here, and what? Fell all the way. I think I'm on this trade. These guys should have activated me, right? They should have activated me. So now this has already given you, if you entered at this region, because after this BOS, market rallied up, played out of this guy nicely. So if you are playing this cube here, your entry, your short will be here. Your shorts will be here. Your short should be here, right? Your short should be here. You open up that guy there, okay? Stop loss here. So you are up like one to. Please, guys, excuse me. Let me check. I think if I'm up to 1 to 4, I should actually. I'm coming, guys. Excuse me. Okay, please. I think it would be wise to just. Okay, I'm up 1 to 4, so I can go break even, farms. Okay, so we are anticipating a new low to be created, right? Expecting a new low to be created, which this guy should actually take us down to a new low, like a new low. So imagine giving us a new low. If you're actually trading a profit account, 1 to 8, you are already in massive profit, right? Being massive, you should be up by 1 to up like 1 to 4, 1 to 5, with 2 trades, 3 trades, you are done with your accounts. Okay. So, and you see, even if you're not in on this trade, you can actually follow the order flow, because like we always say, your last POI, your last entry becomes what? Your new POI. All right. So this was our last entry. So you can see this imbalance. You can actually look to play this imbalance to take this guy to a new low. That's if market does comes back to that region, right? So that's how you can actually play all this move. So this guy's already on the move. So, but what I'll be looking at, because to actually know if this guy is going to sell for long, I think we need to check our Japanese our yen basket, right? Let's see. Excuse me. Let's see our yen basket. Our yen basket. All right. So going to let's see what the Japanese index is doing. The yen index. Let's see what the guy is doing. Okay. That's what it's doing, right? So we can actually anticipate. Oh, this is the reason why USDJPY and GJ is selling now. Guys, if you can see it, please drop a 333 on the charts. If you can see why all assets are just selling, please drop a 222 on the charts. 222 on the charts. if you can see that move, that nice bullish move, BOS, retest, and that move, that means we are going to hold GJ and UJ for long, right? 222. Let's go, farms. Right. Okay. That's the yen basket. Farm. So that means our UJ, our GJ will be a very long trade idea, very long, right? Very long. Very, very long, farms. Very, very long. Excuse me. Okay, so all right, farms. Thank you, farms. All right, so you can see that lower high, lower low, lower high, lower low, break of structure, farms. Feel the imbalance, right? And this guy should give us at least a new high, right? Okay, so that's the reason why you can just see those DJ, UJ, they're just points. So if the 50M basket is actually buying, that's if index of the Japanese is buying, so UJ, DJ, AJ, all the other rest should be what? They should be selling, right? All right. So farms, let's go. Let me take one more. This is getting okay. Let's see NZD USD. Let's see NZD USD. All right. NZD USD. Looking at this structure, looking at our range, you see, market was giving us lower high, lower low, lower high, lower low, lower high. Yeah, give us that BOS, came back again, give us that lower low, right? Wow. Please, can you guys hear me?
Yes, sir.
All right, thank you. So, looking at this guy here, although there's an equal loss here that I'm very skeptical about, okay, but looking at the range, looking at the H4 range now, looking at the H4 range from here to here, right? This is our current range. Here, this is our last swing low, our last swing high. So looking at the range now, you can actually see that even this guy came back, played out of this imbalance, right? This imbalance here nicely, played out of that imbalance, and is giving us a what? A reaccumulation, right, farms? It's giving us a reaccumulation on this guy. So that's the case. So if that's the case, we should be expecting that this guy should actually what? Tap into this move. Guy should still give us that move now. Don't just come and do what you want to do. And you see, like this move here, feel this, that's that 50% of that move. Let's go to H1. You should see it clearly, guys. So yeah, this H1 now. So what happened? This guy just came and tapped this smart money cube. Wow. Ooh. Wow. This guy tapped out of this smart money cube already. And the price action is actually complete. Tap the 50%. Shit. But looking at our H4 range now, looking at our H1, this H1, looking at our H1 range. So even if we don't get that move to this downside, if this guy we just have this cube and it wants to go all the way up, there's no problem. So if it comes, if it eventually comes, right? If it comes, we can actually get this here, this guy here, stop loss below our range and our take profit here. So if we are getting our take profit here, who's raising your hand? Who's raising the hand? Can you guys hear me?
Yes, we can.
Yes, sir.
All right. All right, so guys, I hope you guys can still hear me. So if
Yes, sir.
so if this guy comes to this region, no problem. That will be our luck. But I don't think this guy will come again because this price one is complete. But if it comes, there's no problem. We're looking at our H1 range. Looking at the H1 range, we'll be interested in what? In this guy here. We want to see this move here. We want to see that move here, right? We want to see that move here. This is a potential area for what? Potential area for what? Redistribution, right? So if you get that redistribution here, this, I don't have my templates on this laptop. I don't have my templates. Let me just write it out. So guys, we should get a sell-off at that region. Should get a sell-off at that region. If we get a sell-off, if we get, what we want to see is that redistribution, right? Like we always see, we should have that move like this. Should have that move, something like this, this, break of structure, then that tap that guy and what? Let's get that move, all right? So, but mind you, you should see that. You should get that redistribution. You don't just enter blindly. You should have that confidence first before what? Entering. So remember, this is our range. This is our current range on H1. So we are looking. Wow. Sorry. Want to see that break of structure. Retest and what? Tada, to the downside, right? That's the range we're looking at, right? Okay. So if this guy comes to that region, if this guy comes back, no problem, it should be nice. But if it doesn't, it's no problem, farms. Market is always here. And like I said, this year will be lit. So we're doing this like maybe twice or 3 times in a week, and so that everybody can make this money, right? So this is our range. This is our H1 range. So we are looking to trade within this range on H1. So just know your range and you'll be nice. This is our range. As easy as that. It's just simple. All right. So let me send this out also. Let me send this out. Let me send this out, farms. So let me send this out. All right. So I think we are okay with this, farms. We are okay with this. We don't need to trade all assets to profit. We are okay with this. We are okay with this, farms. We are okay. So maybe let me just maybe I know some of you like gold, right? So maybe I'll just let's just see what gold is doing, and then I'll call it a day. I promise I will look at one of the indices. Okay, so all right, so let's go to the higher time frame. Let's see what gold is doing. So you see, when we go to the higher time frame, we can actually see the long-term bias of this guy and see what this guy wants to do. Okay, let me go to daily. Let me go to daily, right? Let's see the range. Let's see our trading range on daily. Haha. Okay. So right, farms, this is our trading range, right? Looking at this. So let's look at this. We saw, okay, from here, this equal highs that was swept, we got a new high. Here was what? Our higher low, right? Market came back here. So our trading range is pretty. This is pretty our trading range. Okay. All right. So we saw that sweep here. A market gave us that new high, came back down. So here, although we can see this. For me, looking at this, we would want to actually get something like this. sorry. So would want to like see market do this, right? Come to this move here, make that move here. But looking at this, as they are what we call they are internal and external structures, right, farms? So, but even though we want to see this guy do this, but look at this. Let's zoom out a bit, farms. Let's zoom out a bit. You will see that here we see below this is a low, right? See, this guy came here, closed below this low, right? And it distributed even on daily. You can see your lower high, lower low, lower high, low. Here it broke structure here, farms. It broke structure here, right? And it came back to tap nicely into what? An imbalance here. Let's go to H4. Let's scale down to H4. This is good. I don't know. Sorry, my mouse is. I don't have. So palms, look at this now. This is H4. This is H4 range. You see higher high, higher low, higher high, higher low, higher high. So now we got a break of structure here, which we are expecting price to come here, tap nicely into this guy, give us that fall. Now I'm very much interested in this gold now because here I'm seeing this liquidity. Look at this liquidity, farms. This is the liquidity here, lying here. Haha, right? You can see that nice liquidity, farms. All right, so that's area where price is select to, and we are looking at this guy coming down to mitigate out of this region, right? See this it's an imbalance here. So this is my area of interest. Okay, that imbalance. So I'm looking for reaccumulation at this zone, right? Farms, I'm looking at reaccumulation at that zone. Okay, potential area for reaccumulation. But for those that trade gold, I don't trade gold, right? I don't trade gold. But for the sake of people that trades gold, that's that for you. All right, potential area for. Sorry, I have my templates, but not the laptop that have all the templates. I shouldn't be writing all this. I'm still partially on vacations. So this is like a potential area for reaccumulation. Sorry, don't mind me. All right. So now that's that because I think I want to see this guy just come here, maybe tap here, come to this region. You see, we've gotten that BOS to the downside. So here also is also an area for what? It's also an area for what? The distribution. All right. Potential area for what? Redistribution. All right. So for those that trade gold, that's for you, farms. I don't trade gold. Said I trade just few assets now. I don't.
Why you trade gold?
It's not among the assets I'm looking to trade because it's not I always look at assets that can give me good risk to reward ratios. We all know that the volatility in gold is just too much. Just too much. I don't want to be risking an amount that at the end of the day I'm getting something not quite appreciative, right? So I don't just trade gold. Don't trade gold. If trade gold, there's no problem. I'm not saying trading gold is bad, right? I'm not saying trading gold is bad, but I'm just saying personally for me, I don't trade gold. I don't trade gold. Personally for me, I don't. So you might want to trade gold. There's no problem in it. Personally for me, I don't trade it. Just like I don't trade card seat, all those card seat check, card JPY, other assets. I'm cool with few assets. I'm just cool with few assets. I'm cool. I'm just cool with it. So let me share this. Let me share this on the chat box, right? So that's it. So let me just look at one indices and we're done. So for me, I love Nasdaq. I love Nasdaq. That's my number one asset. I love Nasdaq. Like I'm in love with Nasdaq, right? Because I'm not saying, don't say because coach is saying he's in love with Nasdaq, you want to go and trade Nasdaq. Have your own asset that you want to trade. Let's know you by that asset. Let's know you by that asset. Okay. You can see that you see when I was talking about tapering, when I was talking about tapering farms, that you see these guys are actually the central banks, the US central banks actually, the central bank actually integrate tapering into the economy, and that's why we are seeing all the stocks, the bonds, and the rest they're just falling massively. Just for you can see this fall. Look at this fall farms from 16,500 to 15, almost 15,500. That's like 1,000 points. So it's all because of the tapering. That's why you're seeing, because the US are no longer buying these assets. US are no longer buying assets. They're not buying it because they want to stimulate their economy. So they're no longer buying. They're no longer buying. All right. So that's why we are seeing this sell-off. So let's go to daily for this asset. Let's go to daily. Let's go to daily farms. Let's go to daily. Let's go to daily. All right. Wow. So pretty much we've seen this guy. We've seen that this guy has actually closed below the low. Yeah, because you see on daily it gave us. You can look at what it gave us. Then you see it was massive. Higher high, higher low, higher high. Break of structure. It came back. What happened when it came back to this region? What happened? This guy actually, they gave us equal highs here. So if you're a smart money trader, you shouldn't just enter into this because this was like an inducement. So, but if you took it, you might have taken profit from here, no problem. But look at this guy, came back, played out of this guy, and there would have been what? Because this is above the highs. You actually see that nice redistribution here, right? So now this guy has created what? A new low on the daily time frame. A new low on what? So we now have a trading range from here to here. So we want to see that reaccumulation below these lows. Is that easy, farms? Look at for now. This daily has given us a new low. So we are looking for what? Reaccumulation at below what? Our lows. So when we spot a nice reaccumulation, we can actually take it all the way up to what? Come and create what? A new lower high. So due to this tapering, so if BTC for me, if this guy should come here, tap out of this guy, the next move we are seeing is this guy here. But I'm telling you for a fact, write this down. I'm telling you for a fact, if Nasdaq should come all the way here, I think that's the only trade I'll be taking for the year. I mean for the year, because like I said, indices are pretty much pretty bullish. Indices are always very bullish. So if we should get that fall to this region and that nice reaccumulation, definitely, and that nice reaccumulation, this guy is taking us all the way to a new high. Because structurally, right, farms, structurally, this is our what? Our higher low on daily, right? Structurally. So if these guys should come here, give us that nice reaccumulation, imagine getting an entry at this region, farms, from 14,805 to like 16. Let's say if it's giving us a new, because this is like an external liquidity, right? If it's claiming this external liquidity to like, it should give us to 17,000. So from 14,000, let's say 14,800 to 17,000. That's like how many points now, farms? Like 2K plus farms. So imagine using just the smaller lots there. That's investing. If you use the standard lot of one, let's say you're using one standard lot, hey, farms, that's massive, right? That's massive. So imagine holding this trade alone for the year, just hold this trade from here, or let's say for like 6 months, hold this trade from here to here. That's like that. You are an investor. Just get an account. Maybe just put an account with, let's say, $12. Open the small lot, then just forget about it. Put your take profit at this high. That would be massive. That would be massive. I know.
Investor vibes.
Yeah,
Investor vibes.
investor vibes, perhaps. Investor vibes. I think I know a guy. Who held a trade from here. This region, farms from here. He held the trade from here. This was May 21, right? He held the trade from here, and he took his profit last December. This December. He took profit this December. He took profit around this week. When he saw this BOS here, then at the return of this BOS, this is where the guy took his profits here, right? So we can do that. I want us to break that record, guys. So you see, the guy actually took entry from here because he saw higher high, higher low, higher high, and he knows indices are pretty much bullish. He got looking at these farms, you know that you will see a lower time. Looking at this week that came back down, you know that on lower time frames there will be a reaccumulation there. So he took that trade from here. The guy made $60,000 from that trade. $60,000 from here to what? To here, farms. From here, and all the way to this region. So that's massive. So from May to December, the guy held that trade, and I know the guy personally. So I want us to set that record now, two farms, because I'm seeing this guy clearing this liquidity here, coming back down to this region, because now you can see that liquidity sweep here, break of structure. You see, it's all our checklist aligns with this structural point here. So this guy will want to come all the way down, do this, clear out of this region, right? Then give us that massive move to the upside. So all the mentees must be on this trade. When it comes to this, I'll call this trade out, so everybody will be on this trade. So that we'll just do, just like Mr. John Fibonacci always do. He will just come. What Fibonacci always does, he will just come for indices. He will put, there's no price here, so he's just okay. Let's take this guy to 17,000. So guys, I'm going to do the same. When the time comes, we'll do the same. Let's take this guy to 17,000, farms. Let's take it to 17,000. All right. 17,000. That's our target. We're targeting 17,000. So take from here, and we're targeting what? We're targeting 17,000. All right. So that'll be massive, farms. All right. So that's that for NASDAQ. So currently we are looking at for what? That reaccumulation at this region to probably give us that new lower high that will take us down to this move here. So because I think for that we can see this this guy here. I think this guy might just come here, just come to this. Might just come to this region, right? Just come to this region here. These are potential areas for the accumulation. I just come to this guy, reaccumulate, come back to this region here, give us that move from here down to the downside. So I'm actually looking forward to these farms indices, right? So these are areas where we should be looking at. So there's no trade idea here. It's just there's no limit here, just like a trade idea. So we should get something like this here, from here to here, something like this, farms. We should get something like this here, getting a reaccumulation, come to this region, right? Give us that sell move to this side. But mind you, when this guy comes to this guy, if it does, because like I said, indices are pretty much bullish, like very bullish. So they are pretty much bullish. Okay, always bullish. You can't, if you go to your hard time frames, you see that it has been bullish. It has been bullish. You will never see a very long sell trend. So This guy might just come here, play out of this guy, and go all the way up to create a new high. That's another possibility, farms. That's another possibility. So until we get that nice redistribution here, we are not taking any trade. Okay. So that's that, guys. I think that's all. That's all. Okay. Somebody said we should the trade idea behind the BTC. Okay. BTC. Like I said, any idea I'm giving on BTC is not, please and please, any idea I'm giving is never a financial advice. It's not a financial advice, please. It's not a financial advice. All right. It's not financial advice. All right. So don't say I said so. Since he said so, I want to go and risk everything. This is not a financial advice. Okay. So although you can see on BTC, see higher high, higher low, higher high, break of structure, right to the downside, and here you can see pretty much we closed below this low here. So and below every low, we should get that reaccumulation, right? So although I think I see because of this dynamic liquidity here, all this dynamic liquidity. See, this is just like you see, remember all these are subject to change from any fundamental news, any fundamentals. So I saw this dynamic liquidity here, which I'm thinking this guy should sweep all this liquidity, come to this region. This is 30K region. So once BTC comes to this region, and let me tell you one thing from experience, once BTC is coming to this region, most people won't be getting an entry because what you'll be seeing here, it's like that drop will be massive, will be very sharp. It will come like an early morning robber. You just see it come like you see that. Just look at these farms. Look at this long week. This happened overnight. This one here, this drop on BTC to mitigate out of this region here. You can see, it came out, boom. Before you know it, it just all the way up again. So you might see that same move here. You might see that same move here. That coming down, tap it once, and boom, it's going up. But before then, if this guy gives us an accumulation, we can actually take it to what to come and what fill this imbalance at around for something for this 49K region before it falls down again to this region. So that's what I'm seeing. And like I said, it's not a financial advice, but for me, I see BTC coming all the way down to 30K region. And when it comes, I don't need to tell you what to do, farms. I want to tell you what to do. So when it comes to this region, you can see so many liquidity pools above. Look at liquidity. This is what? You can see this liquidity here. You can see dynamic liquidity here. And you should know that we were getting into like maybe this region or an all-time highs, right? When it comes there, you want to invest. You want to invest at 30K region. You want to invest. But mind you, it's not a trade idea. Mind you, it's not a trade idea. Mind you, it's not a trade idea, all right? It's not a financial advice. It's a trade idea, but not a financial advice. Don't mind me. So below this low, we can actually get in accumulation. Going to H4, you can actually get in a buy. Let's see if we've seen that. Okay. So we can actually see that reaccumulation happening below it, as in beneath our low, lower high, lower low, lower high, lower low, break of structure. And we can see that move. You can see that move here. You can see that move that actually tapped out of, right? We've seen that move. If you can see that move, let me see you drop a 1-1 on the chart. A 1-1 on the chart, farms. 1-1. A 1-1 on the chart. If you can see that move on H4. All right, thank you, farms. Okay, so that's it. So okay, for those of us that are on Sir Michael's channel, don't worry, everything will be dropped. It will be the trade ideas will be dropped on the channel. No cause for alarm. Don't worry, it will be dropped. It will be dropped, farms. So those on the it will be dropped on every channel, free channel, Siamese channel, and all channels will be dropped. It's high time we actually go out of this our this forex body. So
I have a question, sir.
all right.
Okay, my question is actually on open interest.
Open interest. All right.
I have tried assessing them. I don't know how to make the lines of open interest visible. It's always showing me invisible, blank.
Okay, I'll do a video on that and I'll drop it on the channel. Don't worry, I'll do a video. I'll drop it on the YouTube channel. I'll do that shortly.
Okay.
All right. All right. So, for me, I'm looking at although this is like here lower high, lower low, lower high, lower low, and it's giving us like a lower high again from here. But look at this point, we've seen that BOS, that's H4 BOS, right? So it would be nice taking a trade from here to the upside, right, to this region. So I'm looking at BTC coming to this region to create a lower this region here to give us that nice what? Give us that nice lower high to the downside. Yes, to the downside. So that's what I'm looking at. We've seen the accumulation beneath that low on daily. Let's go to H1 if you can actually see this clearly on H1 also. So it's there. It's there for you, farms. Look at it. That lower high, lower low, lower high, lower low. See that break of structure, right? So the price action here is actually complete. It's complete. So you saw here high here. This guy created a high, came here again, tapped this imbalance here, and probably it's going to give us a new high. I don't know. Probably going to give us a new high, or maybe comes back down here to maybe give us 100% retracement. Maybe, but let's scale down to a lower time frame. But I'm very much interested in selling BTC. So any buys now, I'm not really interested. So when it gets here, when it gets to this point here, I'm really going to sell BTC to 30K, and maybe get another entry at 30K all the way to maybe we'll be one of the investors that will take BTC from 30K to 100K. Who knows? All right. So, okay, sorry. Let's go to a lower time. Let's go to 15 minutes. So farms, you don't want to like trade everything, or please, everything you can just just trade what you can. Don't have to be on the market. Or you can see this guy already actually see price one is complete. It's complete here. We see this guy give us a high, higher low, higher high. This guy coming back down here, giving us that move again here. And look at this. When it came back down here to mitigate, and here lower high, lower low, break of structure, and what happened here? This guy mitigated out of this region, and probably it's just going to go all the way up. But like I said, I'm not interested in buys. But if you are that BTC lover, you can actually take it from here. For me, I can just say okay from here, from this current price now. You can just maybe market execute from, but I don't like market executing. So just maybe take it from here and to a new high. I don't know. Okay, fam. So that's basically that's it. That's all. That's all.
Hello, sir.
Yep.
Good morning, sir. I have a question. Concerning the indexes, the dollar index and Japanese index, is it possible for them to be going like in the same direction at the same time?
Yeah, it's possible. It depends on it's very possible.
Okay, so if you're trading a pair like USD JPY, what will you be looking at if they are going at just the same direction?
Okay, if actually you are trading your USJPY, now remember you need to get the sentiments for the dollar index and the sentiment for JPY. Like now, JPY is pretty much bullish, right? We saw dollar index pretty much bullish, right? So we want to like get a clean entry on USD JPY. Okay, this guy is just dumping. So I'm almost, you see, I think we're almost up almost 1 to 5. So we are still going. We're still going, farms. So for those in, so I think DJ should be doing the same too. I don't know. Let me check DJ. Okay, DJ. Okay, still going. So we are up 1 to what now? We're up 1 to 2.45. Okay, so let's see. Remember
Okay, so
when you are. Oh, please, I'll come to your question. Please, I'll come to your question. So remember, when you are up to 1 to 3, you know what to do as an investor. You are not you're not the market maker. So when you're up to 1 to 3, you know what to do. You are risking 1% and you've gotten 3% as an investor. You know what to do. I don't have to preach on what to do there. So now the guy was asking for the index, right? For the JPY, for the let me tell you what I do here. I want to see the strength of the dollar index. But mostly for my JPY pairs, for all my JPY pairs, I want to look at my Japanese yen contract. For all my JPY pairs, for GJ, AJ, EJ, all the rest, right? I want to look at my Japanese contract, because what I'm saying this is from experience, the index of that's the yen basket have more effects on all Japanese pairs than the base, right? They have so much what I'll say it now, because they control the Japanese pairs more than the USD or Euro or GBP from experience. So, but what you can actually do, you can check your dollar index, know the strength of your dollar index. Is it giving you bullish? Is it giving you bullishness? That's why we have correlations, right? Yeah, that's why we have correlations. And we know that from our correlations, if DXY is buying, USD price should be buying, right? So when you can also go to your Japanese your yen basket, right? Go to your yen basket, look at, you know that your yen basket, once your yen basket is buying, your USD price should be selling, right? It should be selling. So you synergize all this, but if these guys are giving you conflicts, that's why we have other assets. You can just switch to other assets and do the needful, right? So you don't need to you don't have to just stick to one asset, and while you are missing out on that's why we have two pairs, maybe USJPY, JPY, or USJPY DJ, right? So, but in most cases, most of all those indexes, once they actually go in the same direction, although not at the same pace, but in most cases, that's what they do. So,
okay, thank you, sir. Yes, thank you, sir.
So you might want to go over the videos on correlation, and okay, I'll drop that on my YouTube channel very soon. The videos on correlation and futures analysis for those that want to like know more on that. All right. So, okay, farms. So what?
Okay, Coach, a quick one. Sorry.
What
can you actually execute trades on the currency indexes?
Execute trades.
On
yes.
Japanese baskets.
No, you can't, sir. No, sir. We just use them for our directional bias.
All right.
Yes, sir. Okay, I just hope NZD USD comes back for us. I hope so. I hope it comes back. But if not, no problem. It's no problem. So, guys, that'll be all for today. We'll be having this maybe probably 2 or 3 times in a week, just to help us. For those of us that are taking up accounts. Okay, so like I said, you don't want to trade all assets. You don't want to trade all assets, right? So you can see, now look at this trading range from M15, our swing low, swing high. Look at what's happening here. What happened? Higher high, higher low, higher high, higher low. Break of structure, went back again, feel the imbalance, and it's coming down. You see, these things are easy. It's just easy. Trading within the range is easy. Know your structure and you are done. We saw that liquidity sweep here, saw that BOS. It's coming back. What do? You quickly put your limit there, fill the imbalance. If you give you at least 1 to 3, you close again. Like an investor, you just within just 2 trades, you are done. You are done, farms. So that'll be all for today. And like I said, please, your risk management is should be your number one priority. Risk management. Don't say because this guy is good. This guy drops this guy has made profits over time. See, your past profits does not guarantee your future profits. Past wins does not guarantee your future wins. Don't say because this guy has gotten 5 trades in a row. I might drop 5 trades in a row and all hits take profit. That does not mean I don't make losses, right? Everybody in the forex market make losses. Everybody makes losses, right? So don't say because this guy has had 5 win streaks. Let me change my lot size. This guy is good now. Let me enter with 3 lots or huge lots. Begin to open huge lots. No matter the trade wins, stick with your risk management. Stick with that lot sizing that's proportional to your account size. Don't go about opening huge lots on your accounts, farms. No matter the trade, even though it's high probability, even though it's 90%, 100%, use that same risk ratio. Don't just at 1 to 3. You are okay. I'm risking 1%. If I'm risking $1 and I made $3, you are good. If you are risking $10, I'm making $3, you are good. That's one. Then secondly, stick to fewer assets. I had shared a story of how I passed my profit accounts. So it's very easy, but in fact, it can be very challenging. It can be very challenging, right? Like I said, on my first trade, on my very first phase, my phase 1, I passed within few days. But I struggled with phase 2 before I passed because I was trading so much assets. But when I realized that I'm doing this very wrong, I took just few assets and I passed my phase with just one asset. So taking just few assets, you're like Euro USD, or let's say, okay, I'm taking Euro USD and US30, or I'm taking Euro USD and Nasdaq. I'm taking gold and NZD USD. I'm taking DJ and UJ. As in, just pick one, two. So that we can call you Master DJ. We can call you Master AU, not Master everything not trader of everything and Master of none. You look at Q Banks. Q Banks is a Master of US30. Ref1, Master GU. Daniel Savage, Master DJ. Those guys are masters in those assets. So we can do that too. You can make whatever you want to make with one asset.
Chief, Chief, can you mention the names of these guys again?
Okay, Q Banks. These guys are big traders. I mean, these guys are big traders that, in fact, they're just so big, and you want to follow them, see their success stories, look at their success stories, and from there you get to know how these guys actually made. Just a few days ago, we saw one of the biggest mentors in Nigeria said he started trading 14 years ago, but he gained mastery 3 years ago. So that's just our motivational stuff that you should follow these mentors. See, look at how they've look at their success stories, and you see, and you can actually see how you can actually perfect your own trading through those stories too. So guys, you don't want to trade all assets. You don't want to trade all assets, guys. You don't just trade few. At least 2, 3 is okay. 1, 2, 3. You should be done with that. Use your DXY. If you are trading USD alone, use your DXY to know your bias, trade your USD, then go to Nasdaq, pick other one indices, either Nasdaq or US30. You are done. Or if you don't like indices, okay, or you are the type that likes gold, trade your gold and USD, or gold and GU, USD CHF and maybe Nasdaq. You see, with this, you see over time you become a master. You become a master over time. Because you see, market repeats itself. Market repeats itself. That's why we have seasonality, right? That's why we have seasonality, because market in fact most times, in most cases, they repeat themselves, right? They repeat itself, and that's what bettered seasonality. So look to trade few assets, then gain what? Mastery over time. You gain, especially you don't look to Nigerians because of the situation of the country. You want to start trading today and make money tomorrow. It's not done. It's not done that way. If you want to put money today and make more money today, you can maybe try out betting and do that, right? So, but for forex is actually a course. Forex is actually a course, and it's not something you just come do and get out. No. Over time, gain mastery, and it's easy. These days, we have prop firms that fund traders, and you'll be good. Okay, fam. So I'll drop the videos which we dropped on the various channels, and the chat markers will also be dropped on the various channels for us. So probably maybe once or twice in a week, we'll be doing this to help us improve our trading and also improve our profits. Okay. All right. So farms, that'll be all for today.
God bless you, coach.
Right. Thank you, farms. All right, farms. So that'll be all for today.
God bless you, coach.
Amen. Thank you, farms. All right, please drop a 111 on the chat if you enjoyed this session. Drop a 111 on the chat. Drop a 111 on the chat if you enjoyed this session.
I'll be 20.
Drop a 1 on the chat if you enjoyed this session. All right, farms. So, like I said, this I'm trading all to the as in like 100%. I'm trading fully. So we'll be together, farms. We're all together, farms. So let's get ready to make this money. Get ready, farms. All right. So have a wonderful day, farms. And we'll catch up later in the week. All right, guys. Goodbye, guys.
Bye. Thanks a lot.